We have Jim Antos, bank analyst at Mizuho Securities, joining us on the program today. Jim, before I talk about that one stock, we got to leave the audience, of course, in anticipation. But what about Bank of China shares? I mean, they're down about 0.6, and they missed by a few percentage points. You haven't really made money on BOC in the last, 6 years or so?
That's exactly right. I mean, this is a kind of a favorite stock for value investors. But I think value investors are the ones that like to buy when the valuation is very discounted, very much discounted. But I think value investors have been disappointed the whole time. And the latest earnings show you exactly what the problem is. That earnings miss is significant. Why? It's based on the fact that they can't grow their loan portfolio. 10% loan growth is a little bit light. I think it implies they have a balance sheet constraint that doesn't make the stock or the bank look better to me for the next year.
And what's your view on the stock itself?
I wouldn't buy it. Well, to quote myself when we were talking off camera, I really wouldn't touch it with a 10-foot pole.
You wouldn't touch it with a 10-foot pole.
Right.
All right, there is one stock in the short term that you would touch, maybe with a 2-foot pole, and that's China Merchants. Is that right?
Yes, that's right. You know, the thing is, I think for, the stocks are all trading kind of range-bound since March. And you need an event. And Merchants Bank gives us an event to look forward to. They're going to raise 35 billion renminbi in capital. They plan to do it between now and the end of June. They have given us enough details. We know it's going to be a deep discount. And what you want to do is you want to buy Merchants now when it's cheap. Your holding period is till the end of June. I think you'll make 15%.
Right, so you just want to hold it basically for 2 months' time.
That's not too long.
No, that's not too long.
And you know, Merchants is a very good bank.
Yeah.
You're not miserable by holding that one.
All right, Jim, we're going to talk more about the health of the Chinese banking sector and also what this says about China. We're speaking to Jim Antos, China banks. Back in our guest, Jim Antos, a bank analyst at Mizuho Securities. He looks at banks at Japan, that is, across the Asia Pacific. So let's touch on the numbers we got this morning from DBS. How about that? It can't be all about China banks, but you know, what a beat it was.
Well, I'll say it was breathtaking, actually. And the greatest part of the DBS story is, you know, it's wonderful to have one fantastic quarter, which they have just reported, but it's even more important to have a CEO with a strategy that is going to make money, and that's what it looks like they're doing here. They announced, you know, it was only 2 weeks ago they announced they're buying Bank Danamon in Indonesia.
$7.2 billion.
It's for quite a lot of money. And now it's maybe not exactly DBS's idea. Temasek is selling it to them. They're a related party. It doesn't matter. You know, you look at the ROE. Danamon is 17%. DBS is 11%. Is this accretive? Yes, it is. Are they paying too much? No, they're not. And then the next few days after they announce that, they're spending a lot of money and investing in China. So they're moving forward. We haven't seen that in a long time.
So it's a buy?
Yes, it probably is a buy, but you're going to have to be patient with bank stocks.
Right.
You have to have a 1-year time frame.
But for Chinese banks, you said the short answer is probably not a buy, at least for now. Is
No.
it short?
No, I don't think you can short Chinese banks very well right now. And the reason is because you'll see that when we're done with the results tonight at midnight or whatever it is, you know, we're not going to get any more information from the banks for months. And just as we saw last summer, the stocks just tend to drift down. To do a short, you need enough of a reason to think that that stock's going to drop.
Right.
I don't see it.
So the big one you're watching out for is ICBC, I assume. That'll be the big bellwether, and what it says about the rest of the
ICBC, I think they're going to have 12.5% earnings growth. And the thing is, you know, they are the biggest bank on earth, or just about.
Okay.
That's phenomenally high growth. It's like an elephant winning the 60-yard dash, frankly.
Really?
Yeah.
Wow, that's pretty impressive then. Jim, thank you so much for dropping by, and have a great weekend. Good to see you as always.